All right, guys. Good evening. It is 9 p.m. New York time on Wednesday, December 13th, 2017. Hope everyone's doing well. Um, just wanted to make a video regarding the Federal Reserve FOMC rate decision and statement today. And as expected, they hiked rates by a quarter point to 1.5%, and the market, fully expected that. The Fed have been pretty clear that they planned on raising the rate again, and so as usual, the question becomes what changes in their statement, if anything, and in the press conference. And it should be noted that was Janet Yellen's last meeting and press conference as Fed chairwoman. She is stepping down. Her term is over, and Powell will be stepping up as the next Fed chair. And she pretty much left things just as is. I listened to her most of her press conference afterwards, and it's kind of reflective of what's in the statement. And so basically, so I'm on Forex Live here, and again, I tell you guys, this is a great website. If you go to Forex Live and go to the central bank section, which is normally in this column on the right, and it'll bring you to the central bank's page, and then you can scroll down. You'll find that there are several stories from earlier today when this came out, but this one that was posted, it says full text of the December 2017 FOMC statement. So this is the actual text. And then, of course, this was followed by a press conference by Janet Yellen at 2:30 New York time that lasted, an hour or so. The first 20, 30 minutes was the most, I thought, the most important part of that. So, and, basically, the Fed didn't make a lot of changes. They, again, just said that, labor markets are continuing to improve, and they do expect, although inflation has declined this year and it's running below 2%, although they do expect it to pick up and hit their target in the medium term, but not right away. And that basically they're monitoring inflation closely. In this paragraph right here, the size of future adjustments of the target range will assess realized and expected economic conditions relative to its objective of maximum employment and 2% inflation. Let's see. The federal funds raised likely remain for some time below levels that are expected to prevail in the long run. However, the actual path of the Fed funds rate will depend on economic outlook as informed by incoming data. And they did say up here somewhere that they were continuing to have it be accommodative, at least for now. It's in here somewhere. But anyways, so the bottom line is they really didn't change. And so they got the quarter point rate increase. That was pretty much priced in already. If they hadn't raised rates, that would have been devastating to the dollar. So normally, guys, this is where a thing when, you see a rate hike, you expect the currency to appreciate and rally on that. And that's not what happened. The dollar actually chopped around for really until Janet Yellen. The news came out at 2 p.m. New York time. That's when the rate hike was announced. The market kind of whipsawed and then just kind of went quiet leading up to her press conference. And then, obviously people... traders to kind of digest the news and listen to what she had to say, and I think on balance they just decided that there was really nothing to get too excited about. They did not change their outlook for next year. They're basically still planning on 3 hikes next year, assuming that everything stays on track. But I think the market was looking for something a little bit more hawkish tone by them. Not that they were expecting more than a quarter point increase, but maybe changing the statement and the press conference to be a bit more hawkish. But they didn't get that. Market did not get that, and so they just the dollar did end up selling off after that for the rest of the session, and continues to be weak into the session tonight. Now, with that being said, the data was not the statement was not terrible either. And so Although I'm in a couple of short positions now, I'm trying to decide what I'm going to do with them because, quite frankly, the market really has been looking to sell the dollar rally quite a while now, and I don't think this really gives them any reason to change that, to continue to sell the dollar, because they're just we kind of know what they're looking at now, and this was the last increase obviously for the year, and so unless things really change, I think we kind of know where things are going. So a gradual increase, but still remaining in kind of an accommodative standpoint. So here is the U.S. Canadian, and you can see this when the news came out was this candle, and kind of chopped around for a while, and then it continued down. Actually, no, sorry, it was this candle here, and we kind of have continued down. Oh, hold on, I'm sorry about that. No, it was this one. So basically, this was the candle when the news came out. If you saw it before this, the market basically was just chopping around right in here, off maybe 10 to 20 pips, and then it just went dead, and then after Yellen started speaking, then it went down, and we've kind of corrected back, and looks like we're continuing some more weakness here. Now, it'll be interesting to see what happens, because of course the other thing that's happening right now is the U.S. Potential tax bill that Congress apparently today, President Trump came out and said that announced that apparently there was a deal between the two conference committees in the Senate and the House, and that they were ready potentially to go to vote on this package, and that should be pretty supportive for the dollar. Anytime that it's going to help business, especially, you're going to see supportiveness. So I'm still trying to figure out long term how this is going to impact it. Now here's the U.S. yen. Now the yen strengthened tonight, so this is not all due to the dollar, but from an Elliott wave standpoint, this to me looks like an ABC correction. We had this move down, we had an ABC up, notwithstanding this candle on this wick on this candle here. If I switch over to a line chart, you can clearly see the ABC, and now we've broken through there again. We draw a trend line here, and I can see this retracing back up, but then going back down again. So it'll be interesting to see what happens. I think the tax bill is really the key in the short term here. And excuse me, 1 second, guys. Alright guys, I had to sneeze. So it'll be interesting to see what's going to happen. Like I said, I'm currently holding shorts in the U.S. yen and the U.S. Canadian. I was in the euro dollar long. I've since gotten out of that one. That actually had moved more than the dollar pairs did. So I took some profit on that just to lower my risk a little bit. And we'll see what happens. But I am concerned to see what might happen during the London session tomorrow. Whether they're going to buy the dollar back and just look at the data and say it's really not that bad, and yeah, they didn't substantially change anything, but it's not like they're it's poor either. And of course, if the tax bill gets passed, then I expect to see obviously some strengthening of the dollar that way. So if you're holding dollar shorts, just be cautious. Of course, we're heading into a time of year where liquidity is not as strong, and it will continue to drain each day we go here as we get closer to the holidays. But at least for the rest of this week, it should be okay. So, anyways, guys, so that's that. There still is some good stuff on the docket the rest of the week. So tomorrow, in particular, we've got early in the London session GBP retail sales. Normally this probably would be pretty good data to look at, but I don't think the market's going to really do too much of this, because 2.5 hours later we have the Bank of England's bank rate votes, their official rate statement and policy summary, and next to everything going on with Brexit and employment, this is probably the equally important. So they are expecting now. The last time we had 7 members vote for an increase, and 2 to hold steady. Now they've switched that all the way back now to everybody voting to hold steady. So that's quite a change, going from 702 to 009. So if we get any members voting to increase, that should be supportive for the pound, at least temporarily. And basically, the reason why they're expecting this is because although the bank did raise rates, the news besides that hasn't been particularly great, and the bank has kind of signaled that don't get too excited about the rate increase. So I think they're just saying, well, look, that was kind of a one-off maybe, and we're just going to hold rates steady. But if they get a couple of members break away and vote to increase rates, then that could be supportive. Outside of that, if it comes in 009, then again, it'll depend on what the policy summary states that comes out alongside of it. So those are the 2 things to watch. And then a short time later, we have the euro coming out with their interest rate, and again, not expecting any change. So it'll be a matter of the press conference, which is 45 minutes later at 8:30 New York time, to signal to see whether there's any change in that. The ECB, they're really not expected to make any substantial change to their forecast. That they maybe are going to slowly back away from their easing. And so unless anything really changes, this could be a non-factor. But look, anytime the ECB makes a decision, there could be something. But I probably would not trade into this unless I see some obvious Elliott wave patterns, because this has a chance to be very, very volatile. So, and a lot of whipsawing goes on. So just be cautious with that. And then we have we have retail sales for the dollar. Now this could be market moving if we get a deviation on the back of the FOMC. So they're expecting a pretty good increase in the core number from 0.1 to 0.6, and also an increase in the straight up month-over-month number, the overall number. So if these are a miss for some reason, then that's going to continue to see the dollar pressured. But if they're supportive, then we could see a rally into that, and then maybe selling against that rally. So we'll see what happens with that. And then that's really it for the week. After that, we have Bank of Canada Paulo speaking tomorrow. And here due to deliver a speech called 3 Things Keeping Me Awake at Night. So I don't know how much monetary policy he's going to be talking about. If he does talk monetary policy, this could have an effect on the Canadian dollar, but if not, then it probably will be a non-issue. But it's always in red anytime a bank official speaks. So, and that's really it for the week. After that, none of this stuff here on Friday really is all meaningless, pretty much. So, so that's it, guys. So 2 more big bank decisions coming up. Core retail sales for the dollar, and that's about what we got left for the week. And next week will be a increasingly quiet week as we head towards Christmas, the last full week before the holidays. So so just keep that in mind. So anyways, guys, so that's it. Hope you have a great night, a good rest of your trading week. Make some pips, and leave your comments and questions here if you have any. Like the video, share it, etc. And we'll talk to you soon. Thanks.